Hello, my name's Fabian Baker. I'm the Managing Director of Kingsrose Mining. We're ASX listed. We're an exploration company with $26 million Aussie in cash. We've got assets in Scandinavia. That includes the world's highest grade exploration PGE deposit in Finland and a new industry-leading alliance with BHP, which is one of the largest generative exploration programs happening globally.
Baby, good to have you in London. Welcome to our sunny shores. You're over here for LME?
Yeah, here for a couple of days of LME week. Yeah.
Looking for investors?
No, actually, we're in a fortunate spot where we've got cash. So really, we're here talking to corporates, companies with assets. We're looking for new opportunities.
The hunter.
Yeah.
Not the prey. Very good. On that, you're valued at cash at the moment. So I'm looking at share price, I'm looking at market cap, I'm looking at cash balance. There's something going on. What can you make a sense of it?
Yeah, well, we're valued at cash, so no premium, on that as an asset. Not the ideal scenario to be in when looking at sort of script transactions, but at the same time, things are relative. So the market as a whole is generally pretty weak at the moment. So whereas other companies we've seen relatively decline in the market, we're at least backstopped by that cash. So we've declined, but at least we've sort of found a stable base there, backstopped by that cash. Other opportunities that we've looked at actually may have continued to fall on a percentage basis even more. Right. But then it also prompts us to look at different deal structures. So we don't have to do deals purely around Kingsrose stock. We can look at spending our cash to earn into projects. So option and earn in type deals could be quite attractive, where right now other juniors really struggling to raise money, and we can come forwards with a treasury to commit to an exploration program and earn into the asset. Saves a lot of legal costs, time, and allows money to be focused in the ground. So we're looking at various different transaction styles.
Yeah, I think people do need to look at an alternative strategy, because whatever is going on out there for a lot of companies ain't working. Just sticking with the money, first of all, I think people are probably wondering what you're going to do with the money. Are you just going to spend it and dwindle it down and not actually generate any value? Or are you going to be able to explain to them how you're carefully managing that cash? Let's start with this point. You haven't spent that much this year, how it seems, because if we look at the end of last year, December, you did a video, we got 27 million in cash. Now you're telling me 26 million in cash.
Yeah.
Is that because you're not doing anything?
No, we're busy, but I think one of the key things we're doing, and I'll talk about how we're protecting that cash and how we're keeping busy. But we've also done this deal with BHP, so we can talk a bit more on that maybe after. But essentially, they're funding us for $7.5 million Australian dollars a year on regional exploration. But a portion of that also covers a lot of our costs as operating as a business. So a lot of our operating costs, our staff costs, are being supported by that.
Right.
Also, having a healthy cash position sitting on longer-term deposits in the bank, we've generated, I think, over $1.3 million in interest over the last year.
There you go.
So that helps.
It does help. Okay, so that's good. So managing that cash. Let's get into the probably people's primary concern is is anything moving forward at Pennycat up in Finland? Is anything moving forward at Rana down in Norway? Are you going to be able to create some value there? Yeah.
Well, when we announced Pennycat that we were acquiring that asset 2-3 years ago, we ran up to a 60-70 million market cap. There's a lot of excitement around PGEs and also a high-grade asset like we had. Now, nothing's changed with the asset. It's a fantastic asset. It's got over 100 drill holes into it. We've got a really clear idea of what this could be. Right. But we've had to go through a permitting process that's taken a long time. And in the meantime, PGE prices have basically halved. So understandably, the valuations come off. Shareholders have, been essentially cautious to invest until they really see that line of sight to a drill hole. But we've now delivered on all that permitting work that we needed to do. We've got all of the permits we needed. A couple of key ones, so the regional and national environmental departments signed off, and then finally the mines department signed off and have awarded us a drilling permit. Right. But it's been appealed by a Finnish environmental NGO, This is really common in Finland. It's just one of these mechanisms in the law that can be used essentially to slow down projects like ours. The appeal now will be heard in an administrative court. We expect it to be cleared up by mid next year. And we are very confident that we'll be able to drill at the end of the year.
So I guess there are two things going on there. One, if that was against a company with no cash, it'd be painful, but you're not in that position. And secondly, you're saying it's kind of quite common. This NGO activity is quite common there. It does delay you though to mid next year. It feels like we're not able to do anything for best part of 9 months. Therefore, you can't be creating value. So
sure.
It's fair comment, right?
Yeah, absolutely. So we don't see any credibility in that appeal. It included copy and paste things from other appeals in different parts of the country.
Right.
And we've done 2 to 3 years of hard work on environmental studies and everything to demonstrate why we should be able to do this drilling program.
Right.
And we've had a lot of government support. So we're confident that'll come through. And you're right, in a company with less cash, it would be more painful. But this is also one of the opportunities that Kingsrose has versus other companies. So we have the ability to go in on assets, good quality assets, at an earlier stage, get them at a lower valuation. I mean, this asset we paid $2 million for could become something really, really meaningful. And it's because we've been able to go in early. We've been able to take a view that we will get through the permitting process, and ultimately we'll be able to create value there. So I think once we get that appeal cleared away and there's a definite line of sight to drilling, there'll be a real uptick in interest in what we're doing.
Right. Okay.
Yeah.
And for those happy to wait, that's fine. But for those saying, well, that's 9 months I'm sitting around waiting, twiddling my thumb, and maybe I can reallocate my capital elsewhere, right?
Yeah.
Again, fair comment by them. So where's the value coming from? Is it through the BHP?
Yeah, so in the meantime, we've got BHP,
Yeah.
which maybe I'll come on to that just after, because there's a bit to say about that deal, which is a really, really nice deal, we think.
Okay.
We also have another asset called Rana in Norway.
Yeah.
Now, this is a brownfield nickel mine, nickel, copper, cobalt. Of course, nickel has been really hit hard in terms of commodity price lately. Sentiment in nickel's very weak. So what we're doing there, we've just done a small drill program. We've tested some really compelling targets with outcropping high-grade nickel, copper, cobalt. Those drill holes are in the lab right now. And we've also done some work around the wider intrusion that hosts this. It's 10 kilometers across. And we've found high-grade outcropping surface mineralization all the way around this intrusion. So it's a huge system. It's got phenomenal potential. But again, it's really the wrong market for it right now. So we're in a position where we've done this drilling. We've got some interesting results to come out, but we can go a bit slower on that one. In the meantime, our focus is the BHP deal and business development, looking to acquire a new asset.
Okay.
So maybe if I start with BHP.
Go for it.
So this we were selected as part of their Explore program. So it was a new accelerator model that BHP launched a couple of years ago. We were chosen from a few hundred applicants to be one of the first cohort, and then we've announced the first public deal as a result. And essentially, BHP are now solely funding a long-term regional exploration program throughout Scandinavia, in Finland and Norway.
Yeah.
And what we've tried to do is fix some of the problems that you often see in joint ventures. So often there's a limited spend requirement every year. The incoming party can basically drag their feet.
Yeah.
So we've got BHP tied into spending $5 million every year. If they don't spend it, then the deal can fall away.
So they relinquish 100%.
Yes.
Right.
Yeah.
Okay. Right. Okay.
And actually, the first up to 4 years, where they spend up to $20 million, they don't get any equity in Kingsrose or the projects. That's purely the right to explore with us and then select smaller areas.
Right.
Then each of those goes into an earn-in where they spend up to $36 million to go to 75%.
Right.
But interestingly, there is a step to 51% in the middle.
Of what?
Sorry. So once they spend 20 million over 4 years to explore the area.
So zero.
They have 0% at that point. They then can select smaller areas to become an earn-in.
So it's 51% and 75%.
And then on each of those of each project,
right,
individually,
not
of Kingsrose,
right,
absolutely.
Clear.
Yeah, yeah, and so they can spend money to go to 51% and then more to go to 75%. And just another interesting thing, because it's not uncommon that a major may get to the 51% threshold, decide it's not a fit, it's too small, and then it locks up the project because they've got a majority.
Yeah.
So if they don't, anything short of them going all the way to 75%, they revert to 49%.
Yeah.
We have casting vote on the JV, and we can keep the project moving forward.
Okay.
So it's a really nice way of de-risking a huge exploration campaign in one of the world's most prospective geologies. So
That's something these guys land banking.
yeah, well,
Right.
yeah, exactly.
Okay.
So we've got that going on, and that's a huge program. Right now, we've got helicopters and planes in the air, geos in the field, exploring,
And you're taking management fees.
and we're taking management fees.
You're making interest from the
Yeah.
bank.
So I appreciate, from a near-term catalyst point of view for shareholders, this is real exploration. This is going to take a
Right.
few years to make a discovery and drill holes into something new and meaningful. But it's the work that kind of needs to happen to make new discoveries.
Okay, well, let's look at that fourth leg of the stool, which is obviously going biz dev side of things, okay? So the first two is a little bit of wait and see. It's early, but it's encouraging. We've got management fees we're picking up here, and I'm going to throw the admin of making interest from the bank in there as well. So there's financially, you're not going to come running to the market anytime soon saying we need to raise money. So I think that's the comforting bit. The biz dev bit, the market's changed in 2 years. I mean, even since you did since you did Pennycat, you probably learned a thing or two in terms of timing the market, in terms of types of commodities or metals that you're after. How do you view the market now, given what you've been through in the last couple of years?
Well, I sort of see the market in a general sense. There's basically a split where investor interest has moved more and more towards advanced projects. There's a lack of interest in earlier stage risky exploration, basically. So funding those drill shots is getting harder and harder to come by. The other side of this is deals like we're doing with BHP. So some of the majors are recognizing the cupboards are bare. We don't have a pipeline of assets.
Yeah.
Exactly. All of these mines that they're mining and generating profits from ultimately were explored for and discovered, and they haven't been doing it for the last 2 decades. So there is fresh life being breathed back into earlier stage exploration, and that's what we've capitalized on with BHP. But then with our business development hat on, where should we put our dollars? And ultimately, we want to make sure that we've got, when we pull the trigger on acquiring an asset, we want to see line of sight for how does 1 + 1, as in us and that asset, make 3, and how can we put our cash to work as well to create value and make sure that it takes us to a meaningful catalyst, so that when we do in the future have to raise money, it's at a much higher price. So we're looking at that. We're looking at assets very carefully. There is an expectation for us to do a deal. People have been waiting for a few months for us to find that next asset, and I'm afraid the world of exploration has been looking for years and years and years. So really good quality assets are few and far between.
Amen. Because if you actually, there's maybe a slight segue here, but let's talk about that process. You and I have both been through that process. You've probably seen a lot more than I did, but there's lots of deals out there.
Oh yeah.
Then the nasty bit, you start looking at them, and you start looking at them in detail, lifting up the skirts and going, well, what's this? And it's like, oh, actually, this is not as advertised. And I think that's the real problem here. So trying to differentiate between those and companies who have just been cash starved and not been able to create the content and data that you need to be able to make that assessment, it's quite hard.
It is. There's a huge amount of information out there that is misleading. Basically, we've had a market that has allowed poor quality companies and projects to exist. So it's very hard to filter through those and to screen them. So we've had a dedicated team for the last 9 months, basically trying to drain the oceans for good assets. We've done things like we've taken every single drill announcement on the ASX for the last 3 years, and filtered those to sort of screen for opportunities.
Right.
We're of course working with a network of investment bankers and groups that bring us ideas. We're our own networks, through to selecting key parts of the world where we like the geology, the commodity, the jurisdiction, and really getting into the weeds. And that's actually what we're finding is really what's needed. If you just sit back and take a view on the public companies, well, they're already in the public eye. So if they were good, they were probably going to get the recognition they deserve.
Yeah.
And so we're also finding it helpful to put together districts and find the private opportunities are the ones that aren't being seen, that could be sort of mothballed in a larger company, for example. So.
Yeah, there's been a fair bit of that. I guess certainly with this M&A type activities, kind of stuff which becomes non-core, which is quite attractive. But if there's a lot else going on in that portfolio, it's harder for them to actually move those on. So
and on that, we represent quite a nice opportunity for those groups looking to vend out non-core assets, because it's a chicken and the egg thing. They'll often be approached by groups saying, well, we'd be interested in the asset and we'll take that and go and raise some money. We bring the team, we bring the cash, and they can see some certainty that it's going to move forward. So we've been received well on those types of things. But we think we've got internal sort of memos that we've done on 160 opportunities over the last 9 months. We've signed 60 CAs. We're really active. Every week we're siphoning through opportunities. And I've been doing site visits. We've got quite advanced on opportunities. But from my point of view, we aren't going to do a deal for the sake of doing a deal. It's got to be an asset that we believe can go all the way and be a mine one day and really create some value.
Well, there's the difference.
Yeah.
And you're technically, I guess, you're a very capable team of being able to work out whether that's the case or not. But there is a lot of crap out there, pardon my French, but where people will pick up that rubbish because it looks good on the surface and it's good for a short-term gain to try and drive that share price, or to try anything that'll drive that share price again, which I think is a common mistake.
I think what you said there, that point of difference is so true. I think a lot of the companies out there, they exist because an asset, an idea has come across somebody's desk. And starting from a low base of almost nothing or no company, somebody's gone, I think I can promote that. I see a bit of opportunity there. And how much that opportunity, really is valid or not. They don't really care, and it might have a shelf life of 6 months or 2 years, but that's fine. We're seeing through that. And that's very different for us, where we're coming from a position of having this pot of cash, and we've got to steward that really carefully and make sure when it goes into something, we genuinely believe that's got the potential to be a mine one day. And that's not normally the viewpoint that these things are founded on.
Not at all. So that's getting off away into an area of helping retail just have a quick think about it. Like for me, we've got a 6 months heads up for the next big thing, because the brokers approach and say, do you know people with assets in X metals, in X commodity? And that's when I know it's coming. And I know there's going to be a pump, and they're going to do, get their fees, on associated with that. They're going to dump the stock and then move on to the next shiny new object. And that's where retail get caught out. So it's kind of interesting to me, the fun and the games in the space. But look, sorry for the segue. Back to you, right?
Sure.
Okay, so we've kind of been through these silos of activity, these silos of potential
value creation.
We'll call it value creation. I hate that phrase. It doesn't mean anything anymore. It's like things that you can monetize in some way, shape, or form, either in the short, medium, or long term, right?
Yep.
And you've got to, as a small company, I appreciate cash position, but as a small company, having lots of moving parts is sometimes dangerous. I think it's damaging. It's distracting. The alliteration must stop. It just doesn't work. And I think the audience says it doesn't work because it hasn't worked anywhere else. How do you seeing what you've seen in the last couple of years in terms of the way the market works or the way it values things, how do you make sure that you're not sort of drinking the Kool-Aid and stuck on your models? You referenced earlier maybe doing things differently. I mean, tell me more about it.
Well, I think there's a fine balance to be struck here, because I think the concept of a junior company with a single asset, until that really is out the gates and showing that it has the potential to be a genuine mine one day, claiming that our single asset and our single company is the next best thing in mining, it's just unrealistic. It's a high risk business. So I think to be honest about what exploration requires and the risks that are involved, you should have more than one opportunity at any one time that you're pursuing. But that needs to be really well curated and continually reviewed. And that's what we tried to do. So, the facts can change, and that's actually expected. Whether it's facts in terms of the market changing, your macro environment, or you're getting new data on the project and it's either telling you thumbs up or thumbs down. again, we're in a fortunate position where we can be a bit more honest about that and say, actually, this asset, the facts have changed, and if it's negative, we're going to stop spending shareholders' hard-earned money on this.
Are you brave enough to do that? Because it's like saying, we've spent a bunch of money here, we got it wrong, we know we've got it wrong, we're going to stop now. You're going to get marked down for that. I see too many company CEOs say that and then do that, and sure enough, there's a problem. So it's hard.
It's
easy
hard
to say.
It's easy to say, and it is a tricky balance to make. But that's again where if I sort of talk about hope for the best, plan for the worst. So again, what you want to have is at the point where you're making that decision, you've got other options at hand that you could move into and say, well, we're not just starting from scratch. Actually, we've been fostering a handful of other great opportunities, and here's the one that we think is best that's going to come through. Right. Also, it's not always black and white, as in it's valuable or it's worth nothing. Yeah. There may be ways of monetizing it, putting it on ice and going, actually, we think right now this is a lull in a market that's cyclical. Right. We can actually park that for now. We've got it to a really good, attractive spot for when things improve. But for now, we're going to focus our funds on what we think will create most value in this market.
Okay, people talk about value plays, right? And and I think I wrote something at the beginning of the year on that one. It's like, you've got to continue to assess and challenge yourself in terms of your assumptions, etc. And maybe holding when the market is not responding is the right thing to do. That's also the description of someone who's deluded and goes, that was not you, I'm saying the market is deluded and go, no, it's definitely going to work out one day. Do you know what I mean? So let's real life examples.
I have an interesting, question to you.
Yeah, go on, go for it.
What are you seeing is the sort of quoted time it takes to go from exploration to production of an asset?
18 years.
Exactly. So these are the sort.
What discovery to production?
Discovery.
It's worse.
Yeah. Well, yeah, exactly.
Right.
Yeah. Rediscovery, and then you go through the process. But the sort of timeframes that mining actually works on, transcends these wobbles in the market that are 6 months, 1 year, 2 years. And again, it's harder for smaller companies to take that really long view. Certainly bigger companies.
You run out of cash. A lot of them run out of cash.
Absolutely.
It's usually the third or fourth iteration that actually makes it.
Yeah. So I think, you do have to be careful. You do need to think about your strategy, where you're going to position yourself in terms of commodities and so on. For example, copper for me now, we really like that because it's exposed to this sort of upside thematic of electrification and so on, but it's underpinned by basic uses today and population growth. So those sorts of commodities where you've got this sort of dual track of emerging technologies and uses that are going to drive sort of extra kind of additional value, but then underpinned by kind of core principles now that works for us. So again, but then you will have ups and downs. So try to stick to your guns through that.
Which is fine. I say, if you've got money, that's fine. You're in rarefied air at the moment. You've just got to say to people, don't worry, we're not going to burn through the cash. I think you did at the outset of this conversation, if things continue as it is. What else can you do? In terms of real life examples, if I'm looking at Pennycat, NGOs stepped in as they tend to do these days. You may win, they may win, you'll appeal, they'll appeal, whatever. It could go on a bit. And I see what you're saying about it's a long life time mining, but what do you do in a scenario like that? Do you say, look, bring someone else in who's got the stomach to fight this, the balance sheet to fight this, because the underlying asset seems to be quite appealing?
Yeah, look, I think we'd definitely look at those sorts of options, but not now. We've done the hard work. To be honest, the cost to get from here to the first drill program now is very minimal. Who knows, maybe that year we've got to wait before we've got to drill, actually we'll see improvement in the market. I think we're coming off a bottom in PGEs now. The hybrid market is actually starting to win through, I think, and
versus pure
EV.
Okay.
Yeah,
okay.
I've seen quite a lot of information around that the EV take up is sort of faltering, and that's probably mainly down to this sort of wider infrastructure issue, and people are uncomfortable being purely electric. So having that mixed fuel opportunity is tending to do well and is also accessible to people in more remote areas. So hybrid vehicles actually have a really high PGE loading requirement to reduce emissions. So I think we're coming off the lows in terms of PGEs. The cost for us to get from here to drilling is minimal, and I think we are going to be exposed to a re-rate once we get that through and we can drill it. At that point, we'll create value, we hope, from drilling that and demonstrating some of the potential of that project. Yeah. But then we'll have to have a look at where it stands,
right.
And also in the context of what else we're doing, because we aren't just going to sit here and wait for the next 12 months and do nothing. You know, we're really busy looking for that additional asset. Time is money. You know, right. I respect that. You know, shareholders' money is paying my salary and the team's salary every month. Yeah. We're not paid to just, you know, otherwise we'd wind down to, a bit of administration and a waiting game.
Yeah, yeah.
But that's not, there's a bigger opportunity right now in this market, which is weak. People are desperate for money. And that actually makes us really unique. So
I guess pricing is relevant, as you said earlier.
Yes.
For sure. Okay, so I think where I want to go, maybe a bit of advice here again for retail coming up. Got to be careful. There's some words which the SEC and exchanges have taken control of. Some thoughts, please, on when you're looking at the market. You're looking at what metals work for you. Again, come back to the learning, right? PGEs looked like they were going places, right? When you did that deal, and you've learned, we've all learned. Like lithium people, those sort of violent reactions have a sort of violent reaction as well sometimes. So what are the metals that you're looking at? What are the jurisdictions that you're looking at? What are the things that you're looking at in companies which give you cause for hope that you know what the next step could be?
Okay. I think on PGEs, to be fair to us, we didn't see any sort of big exponential growth there. We saw the risks with EVs and so on coming in. I think what we really saw there mainly was a jurisdictional factors, where most production coming from South Africa and Russia.
Right.
Also those mines getting deeper, lower grades, hit by, So from that one, that is really around the uniqueness of this asset. It is so high grade, near surface, in Finland, one of the world's best mining jurisdictions that happens to also be in the EU. So that was more around the uniqueness of that asset should make it...
Are there not more mines coming on, PGE mines coming on?
Very little, almost none. And again, most of it, it's very specific geology. It's very rare, the type of geology that produces PG dominant deposits, and it's mainly South Africa, Zimbabwe, and out of Norilsk in Russia. The production from elsewhere is really minimal. So that was less around our view on a huge run in commodity price. It was more around where it sits in the market as a high quality asset in a safe jurisdiction.
Okay. So what are you looking at then?
Okay.
Nickel, copper, cobalt.
Well, no. So nickel. I have to say we've been surprised, to the downside on this one.
Yeah.
I went into nickel thinking there is that excitement around EVs and it going into batteries, but it's underpinned by essentially stainless steel use and so on. Yeah. And actually, at the time we've done some of these deals, if you look at all of the majors, Rio, BHP, etc., nickel was one of their top 3 commodities that they were focusing on. So. Obviously, there's been this huge influx of Chinese money supporting Indonesian laterite production, and that's really killed commodity prices, basically. Now, I know Twiggy Forest's currently trying to create a differentiated market here for clean nickel, and we'll see how that goes.
Yeah.
But unfortunately, I've got to own that one. Nickel really hasn't performed well, and we did position ourselves with some nickel assets.
Right.
So now, part of our BD effort, we're not looking for nickel, we're not looking for PGEs. Our primary focus is copper, plus minus precious metals, essentially. And it's also, so it's within those basically precious and base metals that have a pretty stable market and demand base. And then it's focusing for us on potential margin. So what we're not really doing is going out looking for massive low-grade assets that are going to cost billions to build. We want to find high-grade assets with a higher margin that basically lower capex, so a junior can keep them moving forwards.
Yeah.
And of course, so my previous company that I founded was acquired by Adriatic Metals, and I work closely with those guys. And that's just a great example of a high-grade, high-margin asset. It's not huge, but it's big enough to be meaningful. And they've managed to take that from exploration through development, now into production. as a junior.
Yeah.
And that's really rare.
Yeah.
And it's because the capex was about 200 million to build. It was achievable, not 2 billion. So precious and base metals focus, and as I say, mainly that's copper plus precious metals, and looking at potentially high-grade, high-margin,
Right.
sort of mid-scale opportunities.
It's interesting. I think Hot Chili, another Aussie
Yep.
company, they say don't focus on the grade, focus on everything else, because the bottom line is the margins can be driven here, but if priced, and if every time price moves by 10 cents, we add another 100 million bucks.
Well, you know,
so there's a lot of moving parts there, aren't there?
you know, everyone will have their different views on it.
Yeah.
I think Cobre Panama for First Quantum was a big moment. It wiped 20 billion off the valuation of FQM from 30 billion to 10.
Yeah.
And they had really gone from successfully building up their business with a series of smaller to then, you know, increasingly larger mines, and then they really bet the farm on this huge asset. And I think we're seeing, and I've spoken to people in various sort of larger mining organizations, there is a slight move to that, diversifying a bit by being more willing to consider smaller but high quality assets. And if one gets impacted by, you know, a factor that was out of their control, it doesn't wipe the business.
Yeah. Everything's great in hindsight.
Yeah.
I love it. Love it. Okay, and then jurisdiction, I think we talked about as well, in terms of, because that's a big topic of the last 2-3 years. Along with the environmental, social, etc., ESG. There's some parts of the world which just people are terrified of, but actually easier to do business in than Western territories. So
you know, it's not as simple as sort of first world, third world, and I think increasingly the world is changing because of these increased ESG demands and expectations. You know, what used to be a straightforward place to build a mine now is becoming incredibly difficult. You know, really what you want to find is a jurisdiction that wants you there. And those are getting fewer and further between to an extent. In reality, the politicians, you know, globally are promoting critical minerals acts and so on, but you know, they tend to follow rather than lead, and so if there is a sort of opposition to a mine, which does attract negative sentiment often from a certain faction, you know, it can really slow things down.
Oh, absolutely. I think a lot of people with their hands out as well. I don't necessarily want you to get into that, but we've seen it. Whole projects up where you kind of got, in Canada, for instance, you've got like 4 First Nations involved because there's a big land package.
Yep.
Everyone says, yeah, that's fine by me. And when the time comes to it, 2 groups put their hand out and go, well, we want more. And it's like, yeah, and that's kind of, maybe that's fair enough in some cases. I don't know, but it's very unpredictable to scan.
Exactly. I think there's really 2 things here. One is it is just going to take longer in the future, basically. You know, it's not like the old days where you can just charge in and build a mine, because actually that did result in, at times, a lot of poorly built mines, environmental destruction. You know, I've been to some of the old mining towns in Australia recently. Some of the most famous mining towns that, you know, I learning as a geologist, sort of always dreamt of going and seeing what they look like, and they're almost decimated now. You know, and you think, where did all the money go? So things are changing, and I think it's just a case of being aware of that, and also building a business that's a bit more capable of dealing with it. So that's why we've actually built a proper sustainability team, even at this stage, which few companies have.
I'd encourage people to look at your website. It's really interesting to me, the way that you position and the work that you've done. Not just, we've got to go through the motions with ESG, but genuine, like...
Well, look, I think it's got to be, you know, a partnership with the local people, ultimately, you know, in that it's creating, you know, if you discover something, that's discovery's got to create shared wealth, you know, an opportunity. I think that's how you get buy-in, and you turn potential opponents into proponents to support what you're doing. And so we really, you know, we believe in that. It isn't just greenwashing. We're actually about to release our first sustainability report in the coming couple of months, and you know, our focus there, we looked hard at that. And some of it might look a bit menial, as in some of the things we talk about, but what we've tried really hard to do in what's coming out is point to evidence and what we have actually done, not just broad sweeping statements. So again, it's trying to set a bit of a higher standard for how companies like us actually operate in these places.
Yeah, I think it's essential, but I think the other side of that coin at the moment is, and I saw this a lot over at Beaver Creek, 3 weeks ago, you were there, where people have been spending the last 2-3 years talking about ESG. I think what they came up against was a wall of shareholders going, enough.
Yeah.
Enough. Where's this growth going to come from? What are you going to do that's going to be different? Why can't you raise money? Why is it so expensive for you to raise money? Why am I continuing to dilute it? And why is no one valuing what you've done for the last 3 years, ESG or no, right? So that's a little harsh reality.
Oh, yeah.
When times get tough, people get desperate, people think differently, and they're going, I've just lost half my money. Yeah. And the questions are very, very different. When there's lots of money floating, right, 2020, 2021 floating around, lovely. Yeah. Let's all buy beanbags and get the massage table into the office. That stuff's gone now. So that, just finishing off with you, what would your message be to your current shareholders or anyone looking at what opportunity you're presenting them today and say, right, we have got growth potential oozing through our pores. Here's what we're going to do about it.
Yeah. Well, we talked about these different streams of work that we've got going on. And basically, if you look out over the next 12 months, we're going to be seeing the results of one of the world's largest generative exploration programs with BHP starting to come through. We'll be getting Pennycat permitted, one of, if not the highest grade PG exploration project globally. And we're looking to execute on an acquisition of a more advanced project, which will generate a lot more drilling and regular news flow. So I think all of those key catalysts we should see coming through over the next 6 to 12 months, all backed by a great team and a cash position that doesn't also require another cap raise to dilute, so can actually create value out of those things before coming back to the market. So really we're at the ground floor here. We've been building the foundations for the last couple of years, and the hope is now that we can actually build on that.
Timing. Good to see you, Fabian. I appreciate you coming to see us as well, and enjoy LME.
Thanks very much. Cheers.